And we're back, and joining me today is Warwick Grigor, the Executive Chair for Aguia Resources. Warwick, it's a pleasure to have you again. How are you?
Oh, I'm very well, thanks, Shay.
Now, you are not coming to me from your normal location. You are in Germany right now for the Munich Gold Conference, aren't you?
Yes. That's on Friday and Saturday. En route to that, I'm dropping into Stuttgart and Frankfurt to see a number of shareholders and investors that I've been travelling to Germany on and off for 30 years, and I have a good connection with a lot of these guys.
Well, I look forward to your insights from Germany when we catch up again at the Australian Gold Conference in a little over 2 weeks. But we have some more exciting things that we need to cover today, and that is your recent 1-for-10 entitlements issue to raise $4 million for Aguia. Talk me through this placement.
Well, it's actually an entitlement issue, and that's very different to a placement. An entitlement issue gives all shareholders an opportunity to participate. So often, if you do a placement, people complain they're getting diluted. Well, with a 1-for-10, everyone gets an entitlement. This is a share and an option attached to it. The price is 2.7 cents, and the option will be 2 years with a 3.5 cent exercise price. Now, we've decided to do that for the reasons of the recent drilling announcement we brought out that confirmed extensions of the vein system at depth. What we want to do is accelerate access to that. We want to put in either an internal shaft or a decline to go down another 30 metres, open up the workings at that level, open up new stopes, and in theory, a second level will double our ability to supply mill feed. It'll double the number of headings. You know, we've got about 9 headings now. We can go up to about 18. And that's an important step, but it takes money, it takes capital. You can't have an expanding business without working capital. And so the smartest move is to raise some more money now and get into this and get it really humming.
You are, of course, when you're talking about veins at depth, referring to your Santa Barbara gold project located in Colombia. How is this project doing?
It's going very well. We all know that it's taken longer to get to the point we wanted to. We've had to change out the management. The initial management was good at getting it going, but when it comes to the discipline of mining and real planning and scheduling and control, they weren't skilled enough. So we've got a new country manager. He's handpicked a number of miners. We've got a new mine manager, a new plant manager. And the last couple of months have been spent just knocking things into shape and getting back to where we should be. We're at the inflection point where the old team's gone, the new team's come in. They're very experienced and they're doing a great job. And we can look forward to the coming months with a lot of enthusiasm.
I look forward to future updates on that. But I wouldn't mind, just to round out today's conversation, to talk about your phosphate project in Brazil. Tell me, how's this one tracking?
That's going very well. We're building the sales book now. It's basically on schedule. We'll be looking at starting the plant up in about March or April next year. And first sales would commence in the selling season in about May, June, July. So that's very different to Santa Barbara. Santa Barbara is a wonderful high-grade gold project with lots of upside. That to put that Santa Barbara into perspective, it's very similar to a lot of high-grade gold projects in Colombia, Segovia, Buritica. These projects are many millions of ounces of gold, and we are following the same footsteps as these guys. We're not inventing the wheel here. We're just doing the discipline and the work. Now, we talked about how production is going, how the mine workings are going. It's important that we don't just focus on what's happening in the mine. The exploration upside is enormous, and that's why we're continuing to drill. There'll be more drill results coming out in due course. But it's almost a two-pronged approach. But at the same time, we need to come to grips with just how big this system is, and potentially it's millions of ounces. There's a lot of work involved in that. The phosphate project is a lot more simple. It's 10 times more simple. So it requires much less capital. It's got an assured profit margin. The selling price for the phosphate now is over $200 a tonne. Our costs are estimated at about $65 a tonne, and it's a good project to have in the company because of the different country risk, the different operating risk. So you get two for the price of one with Aguia. The excitement of the gold, but the solid nature of the projected cash flow from the phosphate. So it's a great package, and the entitlement issue gives shareholders a chance with share and an option to get set at the bottom of the market. Gold market looks good. The gold price keeps going up. Well, here's a great entry price for shareholders, and they can apply for more than they're entitled to if they want, if they're that enthusiastic. But this is all about looking after shareholders and getting them access to shares at a good price.
Well, it certainly sounds like exciting times ahead. Thank you very much for taking the time out to speak with me today, Warwick, and I look forward to seeing you in person in 2 weeks.
Thank you, Shay. I'll see you then.